it might work, actually, guys. It might work that the world is gonna last a little bit longer because we're putting some duct tape, on all the leaks right now that we have, and we're gonna make another year.
Soul Brothers Macro News is your bi-weekly update that covers all the macroeconomic conditions that affect the price. So obviously not financial advice, but we do want to give you a little bit of context as to what the fuck is going on around the world. So the first thing that we're going to start off with hello, Mr. Chairman, is Monday. So that's today. The U.S. government will be reopening. We are back in business, baby. And number two, there's going to be a federal liquidity injection somewhere to the tune of $10 to $20 billion. I do have questions about this. Maybe you know the answer. Number three, of course, we have the FOMC meeting on Wednesday, Thursday, manufacturing PMI data. I do not know what PMI is. That's another question I have. And Friday, U.S. inflation expectations. The source is from the Bloomberg economic calendar. TLDR, Simon, there's a lot of shit that's happening in the U.S. The U.S. is not the world, but the U.S. does affect the markets quite a bit. So your takes on this, and let me know when you're able to answer a couple of my dumbass questions.
For sure. Dumbass questions. I think this week is quite significant to start with the easy stuff, because the government is reopening. So that's a big one. It has been quite messy in the past weeks. I think the government has been shut down for almost 40 days, 41 days or some shit. It's been historical. It's been historical. And just to take a step back here, the reason was because just Democrats, Republicans didn't find a common ground on budgets. And to my understanding, Republicans, they keep cutting shit. They just wanna cut everything and spend less. And Democrats are like, bro, like we have bills to pay, we have programs to run, we have healthcare, we have like a lot of things, social programs that need budget. You can't just cut everything. So there's like these two camps. Finally, I guess they behaved like adults and found some sort of solution to the topic. And now, as Eno said, we're back in business. So that means we can now get government data again, because literally the government data wasn't coming in, which I have never actually experienced that before, that you can't get unemployment data because the job office is, for the data is closed. No one is working. It's like, okay, everyone is relying on that data, like markets are relying on that data. So I feel like the past weeks we've been in limbo because of that. It's just like so much uncertainty in the market. And you know what traders hate the most? Uncertainty. So I think I really wouldn't underestimate what it means to have the government reopen right now. So that's one thing. And then we have a bunch of interesting data coming in. I think on Wednesday there's the FOMC meeting, and we can expect that at least we will get maybe some hints, right? Further hints at rate cuts. So that is why this has significance, because if we get further rate cuts, it is usually perceived as bullish for risk on assets. So we are basically all hoping for further rate cuts right now. And then we have the job data on Thursday coming in. So we have unemployment rates, we have non-farm employment change, we have average hourly earnings. So basically just job market health. And if the job market health, is not performing very well, then that will also have impact on the interest rate decisions in return. And again, interest rate decisions are important for risk on assets. So the mandate of the Fed is to keep the job market stable and inflation. So those are two things that are also in constant battle with each other, basically. So if the inflation, as right now, is trending upwards and is at least not being not as stable to the downside, I think we're pushing to the 3% on average right now. Then the Fed needs to use its mandate and do monetary policy that will get the rates back, or not the rates, but the inflation rate back into a healthy radium, which is 2% usually. But that impacts job markets negatively. So that's why they always have to kind of compete for each other. And right now it looks like the Fed wants to push for healthy job markets and cares a little bit less about inflation. That means rate cuts. And then on Friday this week, we do have the PMI coming in. That is the Purchasing Managers Index. And yeah, that is basically just a survey of a bunch of purchasing managers. And they are asked to rate the relative level of business conditions, including employment, production, new orders, prices, and so on. So it's basically just a bunch of producer economic data, right, from purchasing managers. And that also tells something about the health of the US economy. Yeah. So yeah, it's a PMI is a leading indicator for economic health. It has substantial economic significance. That's coming on Friday as well. So it's a big week, I would say. We will see volatility in the markets as always, maybe a little bit more than usual, especially because of the reopening of the US government. So I think today, actually, we're going to see that. Right now, the US&A is still asleep, if I'm not mistaken. So I think, what time is it over there right now? It should be, yeah, like middle of the night, basically. And the US markets are going to open in 4, 5, 6 hours-ish, 7 hours. So we still have some time. But until then, or by then, we should see some decisions, actually, I think, of how this week might play out.
Yeah.
So
Another question I have is, what the fuck is a liquidity injection, and how exactly does that work, and where are they injecting that liquidity? It says like on today, or actually tomorrow, Tuesday, there's going to be a liquidity injection somewhere between 10 to 20 billion dollars. I don't even know what the fuck that means.
I haven't read about it, honestly. Like, I haven't read that they do it, but it obviously sounds like they're doing quantitative easing already, or some preamble of it. Basically just either creating money out of thin air. That's usually bottom line under the, if you go to the end of it, that's usually what happens. But yeah, just adding to the balance sheet, right? Bringing liquidity into the market. So I don't know how they exactly do it. You can do some digging on that. But overall, if it happens, obviously liquidity is good for risk-on assets, not so good for inflation. So again, you always fight battles as politicians, right? That's why it's actually a very tough job because you always, like, you make one camp happy, and then the other camp is mad at you. So inflation goes up, but then liquidity gets increased, and everyone gets a bit more, like, markets get a push in the short term potentially.
Yeah. It seems that you guys obviously know better than I do. We have a viewer, Alexander Gray, who, laugh emoji, printing money, quantitative easing. So yes, looks like that is ding, 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 the correct answer. But of course, we're going to move over to more, macro market news. So the next thing that we want to talk about is the namesake of this podcast, which is the affectionately called the Golden Age. It's a Trump, the administration. I have a lot of criticisms of them, but the one thing I will say is that they're very, very good at packaging what a set of policies is supposed to do, right? Which is half the battle of being a good politician, is understanding like how to communicate what the fuck it is that you're doing, right? And that is a part of the game of good governance. And essentially, the Golden Age is a bundling of 3 different policies. I'm sure there's more inside the bill, but the big headliners are: number 1, no tax on tips; number 2, no tax on overtime; and number 3, no tax on Social Security. And at face value, as a populist myself, I think that these are good things. Those are very good things. We don't want taxes on tips. We don't want taxes on overtime. And we don't want taxes on Social Security. Now, that paves the way for a lot of abuse of the system. So we have to see how restaurants and different establishments, try to. I mean, like, it can be a very dangerous game when you enact policies like this, right? Like, how will employers try to abuse the system to benefit themselves, right? But
Mm,
that being said, I do enjoy the spirit of these proposals. I'm already thinking of the secondary and tertiary effects of a policy
yeah.
like this, which on its face looks very good. It's all about the enforcement, and it's all about what the letter of the law is going to be. So curious to see
Mm,
what exactly the bill looks like, but at face value, I actually really like this piece of legislation.
I again, the thing is always with that. I mean, I also like it, right? Like taxes are, um, some people they say they're criminal. They're stealing money from the common folk. Um, there's a huge discussion, right, to be had here on the system of taxes. It's time in place, or it's place and time right now. Um, but the thing is, these countries don't work without taxes. U.S. government doesn't really have a good kind of debt sheet right now. Like they're literally the most over-debted country in the world, and it's not getting better. It's getting worse by the day, right? Like you can actually check out the debt clock on Google, where you can. I think we had it open before, where you can follow the how the debt is going up. And right now, I'm looking at. I don't really know what that number is.
Yeah,
38
38
trillion.
trillion. Yeah.
204 billion. So it's basically it's just like a random number that has no significance anymore, because you don't even like 38 trillion. What does it even mean? Like that in the back here, that thing that goes up by the second, that's hundreds of thousands. Right? It's like 300,000. Now we have 400,000 debt. Now we have 500,000 debt. Now we have six. Like it's literally, like it's like, I mean, it's a lot of debt. Let's put it that way. So how the fuck do you get rid of that debt? Difficult. With taxes, you probably won't get rid of it anyway. With taxes, um, I think it's just so might as well make the folk happy. It's like I think Trump's like, I give up. Like we need to solve this problem otherwise. Maybe by issuing stablecoins that are pegged to the US dollar, that will increase our US dollar expansion in the whole world. There's actually a case to be made for that topic. I think US stablecoins are really good for US debt problems, but that's another conversation. And I think right now he's just trying to look good, because when is the next election coming up? Do you know that? Is it next year?
Midterms are coming next year, which brings us
Mm.
very, very nicely. Great segue, Simon. You are such a smooth criminal, which is, just an incredible development. Treasury Secretary Scott Bessent, is essentially saying that we will see a huge acceleration in Q1 or Q2 of next year, which is, drumroll please, just in time for the midterms, all part of the plan. The
Mm.
increase in real incomes, Americans will feel it in Q1 and Q2 of 2026, thanks to Trump's plans, will be a great year for working Americans, for the markets. I call it parallel prosperity. Main Street and Wall Street can both do great. So obviously, I don't love the timing of economic policy with any political cycle, because the
Mm.
incentives are all fucked up and wrong. But that being said, if you were going to play that game, this game has been masterfully played.
Yeah. Yeah, let's see how good the US economy is really going to look like next year. But I think it might work, actually, guys. It might work that the world is going to last a little bit longer, because we're putting some duct tape, on all the leaks right now that we have, and we're going to make another year, right? But unfortunately, most of us here are young. We're in our 20s and our 30s, so we're going to have to clean up that mess. So
Yeah.
just prepare yourself for that, because the day is going to come, and you don't want to be stuck in US dollars. You don't want to be stuck in real estate, probably. I think I'm fairly happy that we do have crypto in this age. Imagine there wouldn't be crypto. There would be no safe haven, really, right now. Right now, at least there's something that is decoupled from control of governments, hopefully, right?
Mm.
um, and we got it with that. But anyway, to close this whole topic off, it's great for US citizens. Obviously, it's great for liquidity because liquidity is coming back. It seems like the US government is also kicking off quantitative easing again. We know that quantitative tightening is stopping in December. We know that further rate cuts are coming this week. We're gonna see further hints. Right now, there's like a 50-50 chance on poly market, to my latest knowledge from a few days ago, on further rate cuts in December. So maybe after this week's FOMC minutes, we might see the poly market shift towards one or the other direction. And that extra liquidity might find its way, together with rate cuts and so on, into the markets. And then we might see one more high. I'm not getting tired yet of saying that. So let's see if we can get another high. But for now, I think this shall be the quick rundown and update on the latest macro news and some politic talk to give you the latest and greatest from the real world before we dive into further Solana topics. So if you want to get your rundown on Solana as well, then make sure to check out the video about Solami news as well. Thank you so much.